Ladies and gentlemen, in yesterday's video, I warned you that a big move was coming today, and we saw the CPI data come out of the USA, and with that CPI data released, we managed to breach the POC on the volume profile. We managed to breach a major level of resistance on the short-term Bitcoin charts, and now the question becomes, is Bitcoin in a new upwards trend? Is Bitcoin in the clear, or is there still resistance we need to conquer before Bitcoin can go to all-time highs? Unfortunately, the answer is yes, there is still Bitcoin resistance at 103,000, which is the critical level I see on the short term, but we have made some great progress in moving towards it, and the charts are looking much more bullish than they did yesterday, that's for sure. We'll talk about all of that and more in today's video. We'll talk about short term, we'll talk about the cyclical structure and the cyclical deviations we're seeing from the last cycle and how that's not really a big concern. We'll also talk about some unique stuff happening on the S&P 500. The last time the S&P 500 did what it's doing right now, we saw Bitcoin 2x in price in the matter of a month and a half. Fingers crossed we see something like that again. And we'll look into the long-term resistance and the long-term resistance and support zones on Bitcoin as well, just to top it off. Guys, let's get into the content. Before we do so, that was kind of a baity thing to say. Let's not get into it just yet. Let's just look at one thing first. The Bitcoin exchange and the BitGet exchange. So we've got two exchanges here. Guys, you're paying exchanges money in fees and you're trusting them to keep your money safe as it sits in hot wallets on the exchange. If there's a hack, if anything goes wrong, you're screwed basically. That's why you want to be on a good exchange, a reliable exchange. That's why I've got the Bitcoin exchange and BitGet exchanges right here. They don't pay me anything to advertise them. There's no incentive for me except for the incentive I get from you using my referral link to sign up. If you use my referral link down below, not only will you get access to these exchanges, you'll get access to them with a 15% trading fee discount attached to your account for life. So use them down below. Bitronix is global, non-KYC, and BitGet is global minus the USA. Check out those links down below. Let's get into the content. It's been this support line stemming backwards from the 2021 all-time highs that has acted as the major foundational support for this price region stemming backwards since mid-November. Okay, this is the level that matters. This is the level that has held Bitcoin up, and this is also the level that was placed under major threat just 3 days ago. As you can see, Bitcoin came down and wicked below that line very briefly in a flash crash, and now it's bounced back to the upside. The cause of that threat, in my view, was the traditional markets and the macroeconomy. Things like the DXY were getting very concerning. For example, the DXY we know is reverse correlated to Bitcoin. Therefore, when Bitcoin goes up, the DXY is meant to be going down. The issue over the last few months is the DXY has been rising with Bitcoin, causing a lot of concern and highlighting broader concerns in the macroeconomy, which at this point is inflation and the Federal Reserve's reaction to inflation. So for example, we would have expected more rate cuts by now, but the Federal Reserve is holding back at this point because inflation is remaining higher than expected. The CPI data came out last night, and it's good to see inflation on par with the market's expectations there for a change. So we did see some relief in the market. We've seen Bitcoin bounce up, and now the question, of course, becomes, is Bitcoin in a decent position yet? Is Bitcoin strong again? And yes, well, on a macro scale, as we mentioned in the introduction, as you guys know by now, hopefully, we know that Bitcoin's strong. We know that Bitcoin's in a bull market. We know that Bitcoin is in a macro upwards trend. We haven't even broken down yet, right? This line's held. But on a shorter term perspective, let's dive into that. We did some very good stuff yesterday. We really did. The CPI result came in quite good, and Bitcoin reacted well. When CPI was coming out yesterday, Bitcoin was in a bit of a dangerous position. We had the 50 simple moving average, the 50-day simple moving average, which you can see in red right here, as well as the POC on the volume profile, which is a major point of resistance, basically represents the highest amount of historical trading volume at a specific price point of the range on the screen right here. Both of those things were compiled at around 97,000, and that was a sharp resistance level. Luckily, CPI came out good, and Bitcoin was able to jump that hurdle. So that's very, very good news. But I'm not willing to quite say that Bitcoin is in the clear yet on the short term. I don't think it is, and I'll stand by what I've said for a long period of time. I think 103,000 needs to break. I can very easily divide this range up into two price regions. One of them is this upwards exhaustion region, I should say, this grinding to the upside with descending volume and eventually breaking down into the second region, which is this region right here, the accumulation region. Now, the point in which that second region was entered, when we broke down from this upwards exhaustion region, what was right here, okay? It was right here. We formed a plateau of support on that final part of the first region, okay, that upwards exhaustion region right here. We saw all-time highs. We then broke downwards, saw a resistance support flip of 103,000 and entered our accumulation range. 103,000 was then retested. We found resistance there. We got knocked back down into a correction. And it's very clear in my view that Bitcoin needs to break 103,000, not only because that would put us back in an upwards trend as we break the most recent high, but also because that would kind of break us out of this accumulation region, which is identified and kind of contained by 103K, which of course was entered upon the initial breakdown from the first region. I hope that makes sense. Basically, the point is that you don't even really need to understand it. The point is 103,000 is our target because that was the most recent high, and that's the level we rejected from, and that is a local resistance. And until 103,000 is broken, you can pretty much say that Bitcoin is in horizontal accumulation here. Horizontal accumulation, you can say consolidation, you can say whatever you want. Accumulation makes more sense definitionally. But right now, Bitcoin is not in an active move. There's no active uptrend here in the short term. And that's the level that needs to break in order for us to see it. So really not much has changed until we break it. The only thing that's changed here, and the reason why we're in a slightly better position than we were yesterday, is that the mid-range level of this accumulation range at around 97,000 has now been broken, and we're now in the upper level, which means we're more prioritizing retesting resistance than we are prioritizing retesting support, which puts it gives us a degree of comfort in this short-term region. Now, what do I expect to happen next? Well, I'm a believer that Bitcoin's in a macro bull market. I'm a believer that Bitcoin is much more than just the short-term price charts. I believe Bitcoin will overcome the challenges we're seeing in the macro economy. And so, of course, I believe we're going upwards. It's just a matter of how we get there. I would not be surprised if Bitcoin sees a small correction first, because we are forming some sort of head and shoulders formation on the very short-term charts. So if Bitcoin did come down and correct to something like 96,000, which is a local region of support, or even a little bit higher, something like 97,500, or even something lower like 93,000, right? These are all levels that we can go to. As long as Bitcoin forms a higher low, and as long as Bitcoin doesn't go all the way to 89 again, or even all the way to 90 again, I think we're in a good position for a swing down for a higher low and then attacking 103,000 again. That would be an optimal scenario for Bitcoin. That would make a lot of sense. But of course, no confirmation comes until that level actually breaks. So don't get too ahead of yourself. I know we're seeing an upwards move now. We've seen a little uptick. Doesn't necessarily mean we're out of danger. We're not until that level actually breaks definitively at 103,000. But the good news, in my view, doesn't just stop at the Bitcoin charts. And yes, the conclusion there is we are seeing good news in the Bitcoin charts. It's just not fully confirmed yet. The good news is also coming from the S&P 500. If we look at the S&P 500 on the daily chart, we can see that the last time the S&P 500 retested this orange bull market support band was in September 2024, September 9th to be specific. And if we're looking at what Bitcoin did on September 9th when the S&P retested that level and bounced, we saw Bitcoin bouncing and ending an 8-month consolidation and then blasting to the upside and 2xing in price in the matter of a month and a half. So, the last time the S&P was where it was now, Bitcoin, soon after doubled in price. Hopefully that happens again. And right now it's looking quite good. I'm not saying that Bitcoin will double in price again. I think that's pretty ludicrous given where Bitcoin is in the 100,000 region. But we could see a significant surge here, just like we saw last time the S&P 500 bounced off the bull market support band, given that the S&P 500 is now in this descending channel formation, and it has also broken back into the structure in solid yellow that it previously broke below to see a support retest. So that was a false breakout, and now we're swinging back to the upside. So certainly looking good on the S&P and certainly looking good on Bitcoin, but we're not actually good yet. Okay, there's a difference between looking good and being good. We're not in active breakouts, right? Bitcoin is not above 103K. The S&P 500 is not actually above that wedge formation that it's looking to get above. We're just looking like we might be there. So I am leaning bullish on Bitcoin in the short term. I'm leaning bullish on the S&P in the short term. But to say I'm definitively strongly bullish is ridiculous because we haven't seen the confirmation yet. But it's certainly looking good. Now, we are perhaps seeing a little bit of deviation from what we saw in the prior cycle at this point in terms of structure, but this is not abnormal at all. We had an argument that we made for a while on this YouTube channel. We probably still can make it, but I think we'd be stretching it a little bit at this point, that Bitcoin was copying this green box from the last cycle as it's doing right now, and that made sense for a few reasons. First of all, It was the first major parabolic move above the prior all-time high resistance. We saw that over here. We saw that over here. Within that first major move, we saw Bitcoin dominance tanking for the first time of the cycle. Happened last time. It started to happen this time as well. But I think this time we're probably on our way to forming our own unique cyclical structure. And we can see that just by the fact that we're taking a while longer than we did last time. For example, last time we see on the weekly candles, we had 4 weekly candles to the upside, a quick 2-week correction and back to the upside. This time we've seen, 4 or 5, maybe 6 weekly candles to the upside. We've seen 4 or 5 candles of correction right now. We're just taking a lot longer. So we are probably deviating now from the 2021 cycle. But it's important to remember we're deviating structurally. Doesn't mean we're deviating in terms of the entire cycle itself. The 4-year cycle is much bigger than structures, and we see different structures each cycle. For example, the 2017 bull market was very straightforward. It was just rounding to the upside with corrections, very linear, very straightforward, simplistic corrections, just over and over again, 30% corrections, but no significant drops like we saw in 2021. In 2021, we saw one big move, one big drop, and another big move. And then we look at the first cycle in 2013, 2012, we saw 2 significant legs. Leg number 1, pausing for a long period of time, and then leg number 2. Just because they were different in structure, it didn't mean they were not valid cycles within the 4-year cycle. The 4-year cycle is literally based on tops and bottoms and date range trends between the tops and bottoms. You can see anything in between. And it would be ludicrous to assume that we're going to copy the 2021 cycle the entire way. Of course, at some point, we needed to deviate. I think that deviation's probably started. So we're on our way, in my view, to developing a unique cyclical structure. But that does not mean we disregard the 4-year cycle, because the 4-year cycle is still valid, even with the clause of unique cyclical structures. That's just part of the cycle. Just means that we should probably stop focusing too much on fractals, and we should probably just start focusing a lot more on medium-term, short-term price action, obviously with the backdrop of the larger cycle in our views, okay? So good short-term progress after CPI. We broke a major level of resistance in the medium term at 97,000. It's good to see. Bitcoin's not out of the woods yet. It's still in a position where it's threatened, and we're still in this same consolidation range, and that will be the case until we break 103K. But the good news is it looks like we probably will, okay? That's not confirmation. That's not me saying I'm certain that we will. It's just saying at this point, it looks like we probably will. So let's see what happens. Fingers crossed. As we've mentioned before, a lot of the health of the cycle is going to kind of rely on what the Federal Reserve does and how the DXY reacts to what the Federal Reserve does. At the moment, it's not reacting very well, so that threat still remains, but we'll keep you updated there. Guys, tomorrow's video is likely going to be on the altcoin market and the state of altcoin season, so keep an eye out for that. Before we end off the video today, make sure to check out the exchanges. Whatever exchange you're using, you're paying them money in fees on every single trade, and you're trusting them to keep your money safe while it sits on the exchange in a wallet. Don't make the mistake of choosing a bad exchange. I've handpicked these exchanges myself. They're very popular exchanges. They're very low risk historically speaking. Okay, they have reserves information available. They have security funds in case there is a hack. Bitunix exchange is global, non-KYC, and BitGet is top 5 in trading volume and global minus the USA. So take your pick depending on your geographical location, depending on what you want from an exchange. Use my links down below for a 15% trading fee discount attached to your account for life. You can save literally thousands of dollars just by signing up with my referral link. You help me out and you help yourself out by getting on a good exchange with extremely cheap fees. Check them out down below and sign up with those links. The last thing I'll mention is the VIP group on Telegram. If you're interested in trading altcoins with me on Telegram, I trade them 4 times a week. I post trading signals for you guys. And of course, if you want to take advantage of that, you can check it out. The links are simply down below. We've also got a PDF with all of the historical trading results. Check it out, 78% win rate. Thank you guys for watching. Hope you enjoyed, and I'll catch you soon.